Hey everybody, welcome back to The Rational Investor, your go-to place for all things trading stocks, real estate, and all sorts of investment products. Today we're going to delve into the exciting world of options trading and how to make money using an option strategies. The option strategy I'm going to talk about today, three different ones. I'm going to talk about selling covered calls, selling covered puts, and essentially what I call swing trading. I assume that's what everybody else is referring to when they're talking about that as well. So if you're interested in how to make money using option strategies, stick around for the rest of this video. I hope the microphone's working okay today. It's a little bit windy, so it might be messing up with the sound. Anyway, before I forget and before I get into the different option strategies, do me a favor. If you haven't already, hit the subscribe button to join the channel. Smash that like button as well. It really helps YouTube's algorithm and other people find the channel if you enjoy the content you've been getting. The other thing I'm going to do, I'm going to put a link in the description on how to open an account at SoFi. Super easy. You just follow the link. If you deposit $10 or more, they're going to give you a free $25 on top of it. I own SoFi stock. I have an account with them as well. In fact, I have one that I opened that the link is attached to with my 13-year-old son. If you guys use that link, it gets us a gift as well. Helps me keep him engaged because I try to teach him about this stuff as well. So today I want to talk about how to make money using option strategies. Now, you guys need to do your own research and reach out to your financial planners before making any financial decisions. Some of these take on more risk than people always realize. I really advise learning about it and studying it and getting familiar with how options work. It's not as simple as this video is going to make it in a real quick session because you have to learn what volatility, time decay, and all the other things that go into options are to really have a good understanding and be ready for the risks it takes on. What I like about options, though, is I feel like options are kind of like insurance. And if you're selling insurance, you tend to be on the right side of that product. I feel the same way with options. My real thoughts are I want to be on the sell side of options. So I use it to get into my trades as well as getting out. And that's kind of what I refer to as swing trading. So let's start with selling puts. A put essentially is a guess. It's protection on the downside is the way most people use it. If you're the person selling a put, if the stock goes lower, you're committing to buying that stock at the strike price. So I'm going to use a fictitious stock. Let's say it's trading at $105 today, but I'm willing to buy it at $100. Now, I'll use weekly or bi-weekly or even monthly options. So if I sell one of the 100 put for a week out or a month out, if the stock is trading below 100 on the day of expiration when the market closes, I will be assigned 100 shares of that stock. So does everybody understand that? Again, if it's trading at 105, I sell an $100 put. If it closes on the day of expiration below $100, I will be assigned, meaning I will now own 100 shares of that stock. Now, I get paid to do that, and that depends on the volatility of the stock that you're trading. So you have to make sure that you're doing this with stocks that you're comfortable owning. That's the most important part. Because if it's not a stock that you actually want to own, you're going to get scared in and out based on the price movements and the fluctuations. And you really don't want to do that. You want to have something that you're just comfortable owning the stock. Now, I tend to stay away from ones that are not volatile, meaning they don't have big price moves. I don't want anything too crazy either. But for the most part, outside of when earnings announcements are, some of the major stocks don't have a ton of volatility. So as much as I like owning them, I don't trade the options. Like Starbucks is a stock that I like, but I don't go near the options just because the volatility is so low. There's a bunch like that I own the stock, but I don't trade the options. Now, in the same example of a stock that I made up, let's say I get assigned the stock because it closes on expiration at $93 and it's $7 against me already. Well, what I then look to do is, since I like to sell options, I might sell an 100 or an 101 or $105 call against that stock that I now own and continue to collect premium. Again, making up numbers, let's say I got paid $2 to sell the put. That's money I get to keep. So when I sell it, whatever the commissions are, now generally I trade my options at E-Trade, and they charge like 50 cents as long as the stock isn't that expensive. So I'd have $199.50 from selling that option. If I can get another dollar or so to sell a 105 call, I've collected $300 for something that I'm willing to own anyway at $100. And then if it gets to 105, the opposite of the put, if it's above 105, if I sell the call on the day of the option expiration, I will then have those shares taken away from me. So again, if the stock's trading at $93, I sell a 1 month out call against that stock. If a month later, on the day of expiration of that call, the stock is trading above the 105 strike price of the call option that I sold, I will now have to give back the 100 shares I was assigned when I sold the put. Now, you have to do your own research, but stocks that I do this with personally, again, make your own financial decisions. You don't have to follow me, but I use this strategy in stocks like Rivian. I also do it in Tesla. I also do it in Coinbase because I find those stocks move around enough and have enough high enough volatility that I feel like the premium I'm getting paid for the options makes it worth taking the risk, and the ups and downs and the swings, I get paid generously for the options, and they move enough that I get in and out of the stock and can make a good profit on them. The way that I typically start is I try to figure out a dollar amount I want to make in a week, and I'll sell that much premium and options on companies that I'm comfortable with, whether that's selling the puts to get into a position or selling calls on stock that I already own. So if I want to make $1,000 each week, I try to sell $1,000 worth of premium in stock options. And whether I get taken or assigned stocks, I think of that $1,000 as the profit coming in, and I just kind of evolve and continue to trade the stocks based on what I get assigned or what I get taken on. You know, Tesla's worked out real well for me. It's why I don't like that yield max fund, TSLY. What they do is they use an option strategy to be synthetically long the stock, which allows them to be more leveraged. They then buy treasuries with the money that they have, but they'll have to cover those if the stock falls, because by their synthetic position, they're actually long the stock, even though they don't have to put out that much capital. I'd rather buy 100 shares of Tesla and sell a short dated call, and if I get taken on that option, reverse and maybe sell a put below the strike price of the call that I originally sold. You know, I'm comfortable owning Tesla anyway, and if I can collect the premiums of selling the stock options, I can do my own version of having a fund like the Tesla Yield Max one, and I'm much more comfortable doing it myself because really I don't know what type of leverage they're taking on to put on those positions, and I'm much more comfortable managing it myself. Now, be really careful. 90% of people who trade actually lose money doing it. So don't get ahead of yourselves. Don't trade too big. Make sure you have plenty of capital to be able to afford to put on the trades. If you can't afford to risk the money that you're using, by all means, don't risk it. Focus on your jobs. Focus on slowly putting away. You know, my real goal with people is for them to save and grow their accounts and continue to build wealth for their future. I enjoy trading as well. I find I've had some luck or success at it, and I try to explore into different areas of it. The other thing is stick to the few that you know. I get a lot of comments from time to time about, you know, companies that I don't know much about. Now, I'll look into it when people ask and I'll take a look, but if I respond, take it with a grain of salt, because really I try to stick to about 20 companies that I'm comfortable with and don't go too far outside of that, because that can get real clouded and it's really hard to keep up with that many stocks. To be honest, when I was a trader at the exchange, I focused on one item, which was yen futures. I might walk into a different currency pip, but day in and day out, I traded the yen and got very familiar with that product alone. And did real well making a living just trading one thing. So you don't have to spread into 500 different stocks or too many things. If you don't pay attention and you want to set it and forget it type of thing, I mean, I guess the exchange traded funds that do a S&P 500 or things like that are something to look at. Now, if you have a substantial amount of money, and even if you don't, these are things you probably want to talk to your financial advisor about. Anyway, again, I'm going to repeat what I said at the beginning. Do me a favor, give a thumbs up, subscribe if you haven't already, and make some comments. I love chatting with you guys.